watching Stockwatch this week. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Devin Shutte from the Label Group and Shane Watkins from All Weather Capital. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, gents, and happy Valentine's Day. I do want to note that you guys, I didn't even get here and there were flowers for me. There's nothing, but it's fine. It's fine. Your analysis will have to be good enough for today. Well, let's start off actually with we actually have lots of questions that had come through during the week that we did not get to. We'll get to those, but actually just taking a look at how the markets have performed this week, and particularly the JSE, Shane. Actually, the JSE seems that it was protected from some of the volatility that other markets went through, and particularly today, where we had the surge in the Prosus and Naspers share prices. What's characterized trading for you this week?
Well, Zanati, for the majority of 2025 so far, it's really been driven by Naspers, Prosus, Richmond, and the gold shares. There's quite a lot of shares that are meaningfully down. The retail sector, for example, probably down 10 to 15% on average. But the market is being carried by these very large cap gold mining shares, Naspers, Prosus, and Richmond. Today, Naspers, Prosus up about 6%. That's because their largest asset, Tencent, which is listed in Hong Kong, was up about 5% overnight. I guess there's been a bit of a rotation into Chinese tech. Post the DeepSeek announcement 2 weeks ago, but really driven by the 10-cent price move. And then, the rally in gold shares carries on, and, both platinum and palladium both above $1,000 today. So that really, it's kind of that story.
Well, let's actually drill deeper into Prosus and Naspers. These are some pretty significant moves that we have seen here today. Devin, is there anything specific? What's responsible for this buoyancy today?
Yeah, look, I mean, I think it really does come from their holding in Tencent. We've seen, as Shane mentioned, a really strong trading day today in China. And that's driving up a lot of the Chinese tech shares, and notwithstanding Tencent as well there. So we've seen Baidu up, Xiaomi up, JD, all of them seem to be enjoying a good time today. I mean, I think maybe I'm starting to hear signs that property market, the real estate market, is recovering. I see some more credit extension going out there, so I think that's potentially helping. And I think also just bigger picture, these global tech companies that happen to be domiciled in China, but often serve well outside the borders, have really, just from a valuation perspective, become incredibly cheap compared to their US counterparts. So I think, there's part of that would also ascribe to the buying, and whenever Tencent's up, that's going to give Naspers and Prosus a really big boost, and the JSE a big boost because they're such a large weighting in our market. So hence us reaching those all-time highs today.
All right.
Well, maybe also to say, I mean, there was a news story out this morning that Jack Ma attended an Alibaba function in public. Now, you'll recall about 3 years ago when the Ant IPO was scheduled, the Alibaba share price was, let's say, 350 Hong Kong dollars. It fell all the way from 350 to 80 Hong Kong dollars, and that was because the Chinese government, or rather the Chinese Communist Party, cancelled the Ant IPO. Jack Ma disappeared from public view for almost 3 years. And the reappearance of Jack Ma in a public forum has given people reason to think that perhaps the clampdown by the Chinese government on these, let's say, flamboyant and high-profile chief executives is over. He certainly wouldn't have come out of the woodwork without some kind of steer that the CCP would allow it, or it was favorable. So that has made people think that perhaps, the underperformance of Chinese tech, because of the clampdown in China, is now over. And so these shares have rallied, but on very low basis. And of course, if the Ant IPO goes ahead, as it was planned to do 3 years ago, I guess that will be your canary in the coal mine, in a sense that from a CCP perspective, all is forgiven. And that should be a further catalyst.
And actually just Alibaba specifically, because we also did get news out this week that they have partnered with Apple. Just looking at Alibaba, would that be of significant value going forward, and maybe also just insulated from the war between China and the US? Devin?
Yeah, it could be. I mean, Alibaba's got a long way to go, and Shane, rightly flagged that this could be potentially a signal for possibly more investor-friendly leanings from the central party. Whether that actually happens, yeah, they've probably still got a long way to go, but I think market is starting to be open to that possibility. So yeah, let's see. I think they're positive signs, but I think what's really going to be the catalyst in the Chinese market for kind of a sustained recovery is sentiment there. The sentiment is still very depressed from a domestic level, and we're going to have to see investor and consumer sentiment pick up to really give rallies like these a bit of impetus.
Well, let's talk about banks. The question is, do SA banks have value? I'll get to the second part of that question later. But Shane, value in South African banks?
So, Zanati, when the Government of National Unity was formed shortly after our elections last year, the SA long bond rate, the 10-year bond, was trading at about 12.5%. That bond rallied from 12.5 to about 10.5. So the story really is about a decline in discount rates in South Africa. So provided, long bonds stayed about 10.5, and provided, the animosity between the South African government, or rather perhaps even the ANC and the US government, dissipates, it's likely that banks could rally from here. They still look cheap. I mean, ABSA trades, pretty much around book value. It's probably on a PE of 6 or 7, a dividend yield of about 9%. All of our banks look quite cheap, but banks are the ultimate risk barometer in an economy. And if there was a massive deterioration in the relationship between South Africa and, I don't even want to say the United States, just Donald Trump, then that will damage our banks enormously. So banks probably are the most sensitive to geopolitical events. So kind of, if you want to know the answer about should you buy banks, probably yes, but watch the relationship with Donald Trump and watch the SA long bond yield.
Well, the viewer says the panelists have been touting that SA banks are cheap for the past few years, 5 years, except for Capitec. Their charts don't look that impressive. Are we to expect anything better? So yes, the others, the four, are cheap, and then you have Capitec, which has always been seen as expensive. Although, whenever there are dips, we do see some buying activity into Capitec. Devin, how do you navigate, I guess, this difference between Capitec and the other banks?
Yeah, very, very carefully, right? I think Capitec is one that has come from the unsecured lending market and has slowly evolved into one of the, I'd say, big five banks at the moment. Massive client base, and really looking to continue growing, which is difficult for the other banks to say that they're doing now into the business banking sector. So it's been an incredible success story, and I think what your viewer is saying is that the share price reflects that. It's really been one-way traffic and has moved higher. But the question has been around the valuation. Is what Capitec does justified for that? Yeah, I would argue probably yes. Really strong return on invested capital, return on capital employed, and so commands a premium to some of the other banks. And I think still has genuine growth prospects, coupled with the fact that it's not constrained by legacy IT and tech systems that the incumbent four banks are. So, the ability to move faster, be more tech driven, highly cash generative, and a lot going. So yeah, to your point, it does seem like investors have used any weakness in the share price to get involved.
Right. Well, let's get into beer. Anheuser-Busch InBev is coming off its recent lows and is back above its 50-day moving average. Would this be a good entry point for a long-term hold? Shane, yeah, we actually did even see it yesterday. I think it was up about 3%. And I'm actually not sure if it was company specific or if it's because it caught the buying optimism from Heineken's results that seem to impress investors. Shane?
So Zanati, Anheuser-Busch has been very much affected by the weight loss drugs that have been, these GLP-1 drugs that have rolled out in the States, because they not only affect your food consumption and food patterns, but they also affect the amount of alcohol you drink. And the studies have shown that actually when you're on a GLP-1 drug, you eat less and you consume less alcohol. So that's been a big factor, and I guess that's affected sentiment. The recent update was pretty good, and it showed a turnaround in volumes. You'll recall shortly after there was the transaction between Heineken and Anheuser-Busch in South Africa, basically price war broke out between SAB and South Africa, and it affected volumes enormously and margins. That appears to have abated. The recent results have been better, and it could well be a good entry point. I think that a lot of the negative sentiment, I would say, is now priced in.
On your side, Devin, would this be one that you are looking at, considering its recovery that we've seen after a long road downhill?
Yes, I agree. I think it is starting to look interesting. I do think these kind of sin companies, tobacco and alcohol, are facing increasing headwinds from not only regulation, but those health concerns that Shane was speaking about. That being said, the last results I thought were pretty decent. I think nice growth in profits, but margin expansion, which speaks to pricing power in their portfolio of brands, and that they're starting to see the revenue and volume growth again in some of the key markets, which is really what you want to look at in these companies. So starting to look interesting, but not going to be an overnight success story. It'll probably be a grind higher from here.
All right. I'm going to give you, Devin, EOH, and you, Shane, a Trencor. Of course, now EOH called iOCO. The share price increased, and in the last week, it increased quite a bit. My average price is R3.37, with the current level of R2.85. If I hold another 4 more years, can't it pass my R3.37 average price? I think this viewer has actually sent a question like this. But Shem, I think the first time when they sent the question was like at R1 or something, or just under R2. But at least now it's gone over R2. Devin, your thoughts on upside or potential upside on iOCO? I do see that it's up more than 6% today.
Yes, I mean, I think to encourage the viewer, what you're seeing is the company moving through what's been quite a volatile turnaround period, and the trading statement that was out recently really saw the share price jump quite a bit higher. We're trading at around R3 at the moment. So the company has started to do all the right things from the mess of many years ago, and I think they're starting to get their house in order. The forward PE is not looking demanding at around 7 times, and there could be some growth prospects there. But sure, it's from where they've come from, they have shown that they are growing their headline earnings, but there's still a really long way to go. Yeah, Zanati. They're trying different things with management as well. They've implemented a kind of a dual CEO role there, which I'm not too sure if that works. But I think what you're seeing is a moderate recovery, but yeah, it's far from complete there. So yeah, like if the viewers in there, they're getting close to that average entry, and the signs are that this could persist. But yeah, there are still risks to the implementation of that.
Yeah, really interesting to see the moves that we've seen in this company, finally managing to swing from a loss to a profit, but also quite an interesting one that the interim CEO is now gone and has been replaced by joint CEO. So we'll see how that leadership position plays into the running of the business and the numbers. Shane, let us get to Trencor. The question goes, despite the upcoming dividend, I would like to hear your view on Trencor and whether it is a buy.
So Zanati, the Trencor story is interesting but very simple. They owned a business called Textainer in the United States. They unbundled it, and what was left was just cash. At the moment, all of the cash has been onshored back into South Africa, and the net asset value of that cash, which is in a bank, is about R8.50. The shares trading at about R8.30, so still a small discount. Next week, they pay a dividend of R7.30, so theoretically the share price should fall from R8.30 to R1. And then you have to take a view on what could the winding up cost be in order to liquidate the company and delist it. And so I would say that I don't think there's significant upside from here because it's my expectation that the winding up cost could be 10 to 20 cents. So if you'd say, well, the NAV is R8.55 minus 10, maybe max 20 cents, you know, the NAV probably at the moment should be about R8.45 and it's trading at R8.30. So, you know, not a lot of upside. Of course, that becomes very geared and pronounced once the dividend is paid. But my expectation is that when the dividend is paid, the share will fall to around R7.30. And then within about 3 months, the company will then be wound up and liquidated, and you will get that extra rand back.
Well, it's quite interesting, Shane, because I see a sense that's out today that Standard Bank actually increased its stake in Trencor, where they now own more than they own now 5.36%. Anything to read off of that?
No, my guess is that this is held in Standard Bank nominees, which is a private client entity, and it's probably private clients buying it to capture the dividend.
Okay. All right. Well, gents, let's get to more questions. A question on Blue Label. Is Blue Label finally an attractive buy? Let's actually start off with that. Blue Label Telecoms, Devin.
Yes, I mean, the kind of the core offering here is in the prepaid space. That's electricity, airtime, ticketing, vouchers, that type of thing. It's had a really checkered past, hasn't it, with the acquisition of Cell C that, you know, just derailed that core business. The growth story for this business is that they're reaching consumers in the informal economy. You know, and not necessarily being reached by kind of traditional financial services. That's where most of the growth has been. But yeah, execution hasn't always been as consistent as the group would like. They've also recently seen some decreases in those prepaid volumes, which is a bit of a concern. So yeah, there's a bit going on here, but not necessarily one that I'd be jumping into right now.
Well, another viewer says, why is it so cheap at a 6 PE? Lots of growth coming with a joint venture with MV Capitec Connect. And actually, I think I have had a technical analyst also talking about further upside on Blue Label. Shane, your thoughts?
So, Zanati, I think Blue Label, the core business, which is the voucher prepayment business, I think is a very good business. Obviously, they own Cell C, which is you know, the fourth operator is never going to make money. But the issue really is a governance issue, I think, where there have been allegations of related party transactions that the management may or may not have done with Cell C. And so I think the risk you're taking on here is potential corporate governance risk rather than operational risk.
Okay. Well, just before we get to your stock picks, there's a question on Aveng. Of course, that's down more than 28% so far today. Should I buy the dip, or is this a sign of worse to come, or just an acute project setback? Of course, we've seen in the trading statement where they're experiencing a setback in Southeast Asia. Devin?
Yeah, I mean, I think these are really tough businesses, right? You know, basically the way I was reading that statement is that most of their geographies did pretty well, New Zealand particularly, and then one or two poor projects on thin margins just drag the whole lot lower. So yeah, really kind of low quality businesses, very, very thin margins and susceptible to execution risk on these mega projects. So yeah, again, probably not one we're rushing into, and today's market action is kind of just indicative of when you do get it wrong, how badly it can go.
Oh, there's so much pain there. But something that is not causing you pain, your stock picks. Shane, what will you choose today?
So very briefly, I want to punt the PGM sector. When Amplat is unbundled out of Anglo American, the weighting of the platinum sector is going to go from 4% to 6%. And that's in the SWIX and in the SA MSCI. So there'll be a lot of passive fund buying. The platinum metals are up 10% year to date. I think it's an unloved sector. And, I think it's a good opportunity to implement a contrarian view. So any of the platinum shares, just because the weighting is going to become meaningful in the index.
And they are actually very loved today. Your stock pick for today, Devin?
I'm going to go for the S&P 500 equal weighted ETF. And what I'm doing here is, over the last 2 years, the S&P 500 market cap weighted has really been the place to be, led up strongly by those magnificent 7 shares. But what you've got now is that they are really dominating that index, approximately a third of it there. Yeah. And you could argue on very high valuation. So my sense is that this US exceptionalism is likely to continue under the Trump administration. But to get more meaningful exposure to the other 493 companies in that index, this equally weighted index gives that to you. So reduces concentration and single stock risk. And this index has actually historically outperformed the market cap weighted one. So we think it's a good time to be going in there with stretched valuations on the top couple and still giving yourself nice quality US exposure.
All right. Well, thank you so much for your time and for your analysis today, gents. I really appreciate it. And happy Valentine's Day. Thanks to our guest, Devin Shutte from the Rebay Group and Shane Watkins from All Weather Capital. Remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. And is live at 6:30 p.m. on Tuesdays and Thursdays, while Stockwatch this week is live at 12:30 p.m. on Fridays. Lots of times to keep in mind. But do keep your questions coming nonetheless. For now, that is all from today's Stockwatch. That is Stockwatch this week. But do stay tuned for lots more coming up right here on Business Day TV.